I gotta have my glasses just because you said y'all can't see without them.
Hello.
Happy Wednesday. I was like, what day is it? All right. Happy Wednesday, everybody. It's the game show edition of Real Talk. I'm Judy Hayes, the broker owner of Design Realty Group.
I am Darla Nunley. I am a realtor with Design Realty Group.
I'm Deanna Galloway with Thrive Mortgage.
She is our guest speaker today with us. Deanna is one of our preferred lenders, and we've been working with her for over 13 years. She is absolutely one of the best in the business. So we are going to talk about Deanna and Thrive Mortgage loan programs that she provides and how to get pre-approved. So Darla, take us away.
Cool. Well, first of all, today we are over in the Highlands. You can see the sweet little game board behind us. We are in a model home over at Perry, and we've talked and been over in the Highlands before. We absolutely love this community. If you haven't checked it out, give one of us a call. We can get some information for you on what's available now. The inventory is picking up over here, and there are about 13 builders in here that you can choose from, and the inventory is always changing. They do have some price reductions going on in some of the builders. So reach out to us and we can get you hooked up with that and set up some meetings if you need to do that.
Their rec center is almost done in here. When I drove by, I was hoping we could maybe have one of our sessions over there in the next few weeks. They have a phenomenal rec center going on in the neighborhood, and I will double check this, but I understand that the golf course should be open by the end of the year, at least 9 holes of it.
Yep, golf course, trails. You can do hiking. It's got a lake where you can do canoeing, the activities. It's got a 55 and over community. It's got a duet community, which is kind of like a duplex with those beautiful modern farmhouses. So there's a lot to offer over here. And it's just off of 99. We're about, 20 minutes from the Woodlands? So it's kind of a perfect location here in Montgomery County.
10 minutes if you're riding with me.
Yeah, that's true. That's true.
Which I try not to.
So this session today, we have Deanna with us today because we're going to be talking about the second important step of the buying process. The first step, obviously, is you hire a really good realtor.
One of us.
You want a buyer's rep anytime you begin looking for a home, mainly because we kind of help guide you in the process. When you're out there clicking on Zillow and Realtor.com, you're just going to get anybody and everybody, and you're going to be inundated with text messages and emails of lenders, mortgage companies, insurance companies, realtors out the wazoo, and every time you do that for a house, you're doubling it and tripling it. So if you want to make sure that you start the home process off right, start with hiring a really good realtor. So the second part of that is getting your pre-approval. We will talk to you when we first begin the process. We will ask you if you've met with a lender, if you've talked to anyone. So if you don't have a lender that you prefer to use, we're going to encourage you to go with one of the lenders that we are familiar and working with constantly. And we're going to talk today about why that's important. So with us today is Deanna, and Deanna's going to tell us a little bit about who she is and who she works for over at Thrive, and then we're going to get into the different type of loans that she offers. So, Deanna?
Okay, well, I'm Deanna Galloway, Thrive Mortgage. In my world, Thrive Mortgage is the best company out there. We are very family driven. We start with the CFO of our company, Celine, comes all the way down through the branch level. My team and I have actually been together for 22 years. So I would say we have something.
I didn't realize that. That's
22 years. Erin took my kids on vacation with her.
Well, one of the things that I think that is important about that is you have the background, the people behind us. We're the front face. Darla and I are the realtors. She's the loan officer, and we're doing our job. But what makes her strong and us strong is the staff and the support system we have behind us. We can't do it by ourselves. We're on the front lines, but the people behind us, that's very important to keep us moving forward and keep all our ducks in a row, because there's a lot of ducks.
And the team we have keep me in line.
Right,
so I don't disappoint you guys.
Exactly.
Right. Exactly.
Well, one of the things about a lender, in case you guys don't know, obviously, the realtor and the lender are the two most important people in the home buying process. So Darla and I are fortunate enough to get the really fun part of house hunting. We are really, really fun. We're finding your perfect dream house. But this person is so important because she has the money. She has the money.
That's the reason we're in green today.
So we, help you find a house. And once we're under contract, we're going to really talk about why it's important that this lender that you choose is experienced and knowledgeable in many different ways. Because once we house hunt with you and execute a contract, The lender is then in charge
Right.
because she has the money and she has processes and procedures that we all have to follow because she has the money. And the lender is then in control. Once we have signed, the lender is then in control. So that's why it's very important that the lender knows what they're doing.
Right. So let's talk a little bit about, tell us about the different loan types real quickly. We have conventional. So with conventional, what's your credit score have to be?
Well, credit score is a big part of it, but we don't always limit ourselves there. But there's driving scores. So you look for a 680 to get the better deals,
Right.
better rates, the things that are counted in that part of things. FHA allows for more leniency, allows for more credit leniency. It also allows for more debt to income leniency, a little bit more bang for your buck.
Start to use big words, pay
I
attention.
know. Yeah.
So that credit score, the higher your credit score, the better, the lower the interest rate, possibly.
Possibly.
Okay.
That's right. The
What's,
better
what's,
options.
what's the minimum credit score you have to qualify, typically? Minimum.
Well,
Ding, 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 ding.
Yeah.
This is our game show.
ding, ding, ding. Well,
Because a lot of people aren't sure.
That, well, and then that's because there's some people that'll say we go down to,
Right.
But, getting 620 is a really good area to target for.
It needs to be-
Doesn't
to be in
mean you
that range.
can't do things
Correct.
below that,
So-
but you always want to target.
Right. So if you're below a 620, you definitely need to work on getting that up. And meeting with Deanna in the very beginning, if you find out that it's not there or you want it to be better, Deanna can help. A lot of our lenders, including Deanna, can help set you up on a path to get you moving that credit up.
That's right.
What affects your credit?
Okay.
What affects your credit score typically?
Late payments and recent collections.
Correct.
Make sure you make those small credit card bills.
Pay
Right.
everybody.
Okay,
Right.
pay.
On time.
And
Right.
don't forget that automated payments, that is for a convenience, but you're still ultimately responsible for it. People tell me all the time, well, it was automatically withdrawn. Well, my bank missed it. Unfortunately, that's not a real good excuse.
Right.
It's still your financial obligation to make sure it's paid.
Right. So we've talked about conventional, we've talked about FHA, we have USDA. What is USDA?
USDA is a zero down program, a no money down program.
And what's it meant for? It has
It is-
restrictions.
It was designed originally to get people influenced to go to the rural areas. Well, now depending on where you're at, you're still considered rural, but
Right.
there are restrictions. There's income limitations and there is address limitations or eligibility. You
Right.
got to make sure you are eligible as far as your
Right.
annual income. Also,
Yes, income independent, driven, and location.
Correct.
Okay.
Mhm.
We do a lot
That's
of those
right.
loans, though.
Yes,
Because
love them.
we
We
specialize
love
in a lot of rural properties. All three of us do.
Right.
Mm-hmm. Country girls.
VA loan.
VA loans.
VA is our favorite, and we do. We're Thrive. First of all, Thrive is big supporter of the veterans. We all are. Our families are all veteran driven as well, but it is our favorite. And there's some it fits a box that's unlike anything else. So there's
So
lots
one
of
thing I'll
options
say
there.
about VA loans, I've done this for 13 years. I've closed a lot of deals, but I didn't realize until my daughter actually bought her home that there is no PMI on a VA loan. Because generally all these other loans we're talking about, if you don't put 20% down, there's what's called PMI, private mortgage insurance. Everybody's like, what is that? It's an additional fee that, a lender has to calculate for you to tell you what that payment is. But on a VA home or veterans with no money down, you still don't have to pay that PMI.
Correct.
So
There
that's
is
a
no
couple
additional
hundred,
line item
right?
there.
That's a couple of $100 a
Can
month,
be.
maybe.
Sometimes more than that.
Okay.
So let's talk real quick about, since we're on money today, conventional loan, minimum down payments 5%.
Actually, 3%.
Okay, so they moved it. I had heard that we
Yeah,
got some
3%.
programs where they were at 3%. FHA
3.5%.
still 3.5%. USDA and VA are both zero down loan programs, but there are requirements to be
Correct.
met with
There's-
those specific requirements.
Mhm.
Okay, so the biggest reason, so you've learned about those. The biggest reason that we have had Deanna with us today is we're going to talk about that second step in getting your pre-approval. The pre-approval is what we consider your ticket to shop. So it allows us the parameters in which we can help you find a home. So if we send you to Deanna comes back and says, I can approve them for $300,000. At $300,000, when we're going out on the market, that's where our main character is looking. That's the biggest thing that we're looking at there. So with that pre-approval, what do you look at to make a loan amount and a loan program decision? So
How
if
do you,
you're
how do
looking
you
at
determine that price?
determine
Because-
if an FHA loan is better for them or a conventional loan.
We
is
take
better
all
for
of
them.
those things we just been talking about. Credit scores affect the loan type. Your income affects your debt to income, which affects your payment. Your available assets to cover those closing costs, the down payment if required. We take your liabilities, how you pay your credit, what your credit looks like, not just your score, but actually how you pay your credit and how much of it you have.
Right.
So
late payments, if y'all are not thinking late payments are a big deal,
They're a very big deal.
They're a
late
big
payments
deal.
are a huge deal, because why would a lender lend on a mortgage
house,
to you
yes.
with a biggest investment you probably will ever make in your life when you make your payments late?
Well, I have
So
a couple
it is
questions
a big
to
deal.
confirm or deny. True or false questions at the
Uh-oh.
end of the post. True or false? If I am late or in default of my student loan, can I be approved for a mortgage? I thought it was an easy question.
No, it's not actually. First of all, you have, if you're actually in default, and your depends, you have to bring them current. Possibly, you have to make sure you're still in good standing with the government. So there's a lot of questions.
There's
a lot of
gray area.
answers.
Sorry, didn't mean to throw that on you.
That's
One more.
okay.
I have heard that if you have been late on your mortgage payment in the last 12 months, you won't qualify for a
That
loan.
is actually false. You can be late.
Okay.
But have a pretty darn good excuse for
Right.
it.
Okay.
But no. Now you get to the second late.
It's not going to happen. So most people know that if you're unable to pay something, they usually won't pay a credit card or something like that. The mortgage is usually the first thing that gets paid, or rent, something like that. Okay, I just wanted to throw that in there.
So, Judy, pre-approval.
Pre-approval. What is the difference between a pre-approval and a pre-qualification?
A pre-qualification is we take the information that they provide, written or verbally, over the telephone or written application. We pull that information and we issue the pre-qual based on what you give us on the paper.
Correct.
Pre-approval is when you submit the validating documents behind it. Pay
Okay.
stubs, checks, the bank statements, W-2s.
Perfect. That was going into our next question about
Right.
documents. So, honestly, I'm the direct one here. You can go online and type anything you want in your loan application. I can say I make, $1 million a month and I don't have any bills. You pull up the credit report, what is this on here? So when you go ahead and complete that paperwork, remember you're having fun with Darla and I house hunting, and
Right.
she's just keep asking you for documents. You're like,
And
oh
you're
my
getting
god,
real excited over
yes.
there.
And she's like, why do they keep
I'm the
asking me
boring
for so many
person.
documents? Yeah, she's not as fun as us. She wants things. She's very demanding. Here's the thing. It's like the eat the frog that we say in marketing. Get her the paperwork, because a pre-approval letter, when we're taking you to make an offer, you're way stronger than a pre-qualification, because the agent on the other side knows she's already looked at your tax returns, your bank statements, and you have confirmed that your information in the loan application is actually accurate.
And it's not that everybody lies.
You
it's
have
just
to
that
do it.
some of the things
You
that
forget.
you think your income is this, when it turns out it's actually a little bit more or maybe a little bit less. There's some of the things.
Well, then you forget, oh my
What
gosh, I
about
put
that
sign for my daughter's car, and I
or
forgot
that child support on the bank, the pay stub
Yeah.
that's withdrawn, and you
Yeah.
didn't realize.
Right.
And
that's what those people behind the scenes of her staff are there
That's
to
why I'm the boring
analyze.
person.
Right, you're the boring. She's money though. We like her. Okay, next question. What happens once you get all that paperwork done and sent over to you? So we're under contract. We send you the paperwork and you ask for documents. And Darla and I were talking. Sometimes they're like, why does she ask me the same? Why does she ask me for all this paperwork at the same time? She keeps asking me for more and more documents.
Well, once you get the documents, there's things within the documents. What about, we forgot to mention that child support? Well, then
Right.
we have to have those child support orders to show what you actually pay. We have to have more validation. Everything we do is about validating the information that we've got. Doesn't mean it's a bad thing. It just means that we have to make
You
sure
have
that
to prove
the
it.
whole story is true.
You have to
We're
prove it.
creating a story, so we have the ability to loan you all that big money.
Right. So we
We're
hand
telling you
you
your story.
We hand you the client. We've executed a contract, and what do you do physically in the office? You take that and give it to an underwriter, right?
We have a team, our processor.
Right. So you have a processor and an underwriter. The underwriter is the one that's going to be taking the look at all of those documents that you're supporting.
The underwriter has the actual privilege to give loan approval.
Right.
Okay,
So it's not you doing
to
it.
make sure that we have
Right.
made all the policies
Right.
and procedures in order
But
to
it's
make
not
that.
you.
Correct.
You're passing it to an underwriter that's going by the guidelines
Yes.
of Thrive Mortgage, that is saying, I need a little bit more paperwork on where he was a year ago, because I'm seeing something going on in his bank statements that we're not really sure why are these varying.
Case in point, he's
things
making
coming
a
in.
car payment every month that's not on his bureau.
Right.
Maybe he's making his daughter's car
Right.
payment, but
Right.
there's a car payment. They'll want to know, is this your,
Correct.
are you financially obligated for that car
Right.
payment?
Mhm.
Well, no, that's my daughter's car in her name. I just make the payment for her occasionally.
Yeah.
She's in
You get all
college,
kinds of
whatever.
weird stuff, and you
Oh,
just don't
yeah.
think about it because those loan applications, when you're filling them out, they're kind of cumbersome.
Bank statements are really cool to look at.
Yeah, and one of the things I want to address that's not on our agenda, sorry, a lot of people come to us with a pre-qualification letter. They've already got it, and they called online, and they're giving it to us, and it's from somebody online that we've never heard of it, Freddie's mortgage company, and we're like, okay, great, because, I can go online to Freddie's mortgage and fill out fake information too. And we're like, how about, we want to send you to one of our pre-approved lenders, and nobody wants to do that for one reason, not because they don't like her or believe us, they don't want to fill that paperwork
That's
out
right.
again. They don't. And kind of what I tell them is, it's like going to church. Everybody, it's the best hour of your week. You're going to get something out of it. You need to go. It might be a total pain to sit down for another hour and fill out a loan application. It'll be the best hour you spent all week, because the next 30 to 60 days, you're going to be spending your real estate life with us. And the sooner you get that paperwork done and the smoother the transaction is, the less stress for all of us. So we
Right.
try to put the people that we know
Right.
are experts to streamline it, because it's stressful.
Well, because
for everyone.
Well, so think of it this way. You also have the ability to get a better interest rate, because we keep saying not all lenders are the same.
Shop
and,
it.
And you can even get a higher approval amount, because not all lenders require the same criteria. Fit you, and you're not really sure why you have to, do this all over again, but it actually might turn out to be a benefit. It does for some of my clients. It actually does turn out to be a benefit.
Well, if you went online to fill out a loan application, the first question I say is, do you know Freddie's Mortgage? You have a relationship?
Right.
No.
No,
Well,
it was
neither
easy.
do
It
I.
was easy. Rocket Mortgage online, right? So it
Neither
was
do
really
I. So
easy
they
to
don't
do.
know you, and they don't know me.
Right.
So your file is at the bottom of anything they're doing.
Right.
When we have any business partners, title companies, lenders, inspectors that we work with, they know our first name. If there's a problem on a file with Deanna, I'm knocking on her door. She's answering my phone call immediately.
Right.
She knows us. We have a relationship with her.
Right.
Because she wants our business and we want her business. And Darla and I only do business with the best people in the real estate industry, period.
Well, because it's your money on the line.
Yeah.
And we want to make sure that there aren't any issues that they throw up at us at the last minute. Because again, Dana's going to submit it to the processor and the underwriter. The underwriter's going to kick it back out and say, we need paperwork here. Dana's going to get on the phone or email, call you, say, check your portal. This is the information that we need. You're going to supply that, and then it's going to go back into the underwriter's hands again. They're going to take a look at it, and they're either going to say, yes, no, great, and then it's going to come back out, and then we're going to recheck everything again, and then we're going to go to the closing table. So there is a little bit of a process. So while you may get not really understanding why we keep going back and forth with this, again, it's not Dana looking at the paperwork. It is someone in Thrive Mortgage, that underwriter, that's looking at it, and they are verifying and validating everything that you're telling them to make sure that everything's lining up with what they're seeing. So keep that in mind. So let's go over, we always have to talk about this because you don't understand, you don't know, and you assume, we all assume certain things. So let's talk about the do's that you want to do while you're under contract. Let's talk about the do's. What's the do's?
The do's: pay your bills, keep your job. Don't spend any money. But everything that we are doing is based on that initial application. So whatever you put on there, you got to stay in line with it. So that means your credit scores have to stay up, your job has to stay up, your income has to stay up. Those are the
Your
things
bills
that
have
you
to
do.
be met.
The bills have to be met.
So what's our don'ts?
Don't quit your
Biggest
job.
don'ts. Don't quit your job.
Don't go
Even
buy
if
a
you're
new
making
boat.
better money.
Don't buy a new boat.
Boat.
Don't buy a new truck.
You can only window shop. Don't buy new furniture.
Nothing.
Don't do anything.
Right. You're on, well, I tell my clients, you're on
Just
lock.
start
You're on,
your
finan-
life.
you're on
That's a great
financial lockdown. You
We
don't-
actually send a do's and a don'ts.
right.
Yes.
And we do it multiple times
And you need
too.
to read it, because even
Yes.
going out, let's say you buy a house and you're like, I need to go out and get a refrigerator and a washer and dryer. So now you go to Home Depot, you open up or you apply for credit for a Home Depot credit card so you can put these things on Home Depot. Well, if you're sitting at your DTI numbers and they're super, super close, you've now just thrown yourself out of a loan.
That's right.
Because you now are taking on more debt that your DTI says you can't afford this note. So, you're going to always want to work with your lender when you're looking at doing things like that to make sure that you don't even want to pay any bills off. You don't want to pay a credit card off without talking to your lender, because that can mess you up as well. So, are there any other biggies? So
those are the biggies.
Don't quit your job.
That's the most.
Don't buy a house.
Don't buy a boat. Don't get married.
Don't get married while you're under the process.
And
if you're not
they're
married.
like, what? I got a horror story. We should do like a bloopers thing on the things that have happened in the past. But we had an agent in the brokerage bust a deal at a new construction table. Literally, almost the last paperwork was signed, and the last form was, has your marital status changed? And they're like, yes, we're so excited. We got married 2 weeks ago.
Yeah,
the deal busted at the table.
Yeah, because now the lender is now
they got to pull the other spouse.
Now they're going to look at both of your credits.
So that's a funny, but that was horrible.
The other thing to remember is don't co-sign for anyone. Yeah. It's not your loan. It's not coming out of your bank account, but now you're responsible for the credit. So I know we do that for our kids sometimes, or our friends, or our parents. Do not do that either. So once you work with Deanna, our preferred lender, you're going to get a list of that. We're going to need you to pay attention to it, because that's probably one of the biggest loan busters that we find, or little bitty things that people do that mess up the total process.
We don't want to be crying at the closing table.
So we hear about first-time home buyer programs. Is there a first-time home buyer program?
Yeah.
Who made that up?
Who made it up?
It's just been a verbiage that's been used. I've been in it almost 30
We get asked
years.
it a lot.
It's just been
Well,
used.
and it probably was a program at one point.
And so by
before we were
definition,
born.
if you have not owned a home in 3 years, that's the question. Have you owned a home in 3 years? If the answer is no, then that's by definition a first-time home buyer.
But there's
actually
no program.
no.
Well,
there are, but what it means is that you can own a home. You can own a home and still be eligible for those if you sell, if you don't.
Right. Well, and some of the programs, there are grant programs in the state of Texas that you qualify, but you only qualify if this is your first time purchasing a home. I know that we've got some other lenders that are they're using rent. I don't know if you guys are using 12 months of consecutive rent payments. So if you've never bought a home before and you don't have great credit, your monthly rent, as long as you're making it on time, can now help qualify you for that loan.
There are assistance though for first-time home buyers, yes.
Correct.
But there's also assistance for ones that have owned their home right now. They don't even have to sell.
Correct.
There's assistance for those.
But my point is, there is no. Everybody says, "What do I qualify as a first-time home buyer?"
Right.
And there's no first-time home buyer.
Yeah, there's not any
plan out there. You can qualify for different things.
There's not a program called that.
There's not a program called that. So what's the last one?
We really talked about that, about communicating with your lender. Like I said,
all that
was that last one. So the one thing that I want to add to the list, because we're getting down there, is the obvious big news is that our interest rates have gone up / stabilized. So as the interest rates rise, that means your monthly payment goes up. Well, housing prices have went up, but as Darla said earlier, these new constructions and other housing, as the feds decided to raise the mortgage rate to slow our industry because we were out of control for 2 years. So we talked about that in our last show, that's needed to be done. Nobody likes a higher interest rate, but this is normal. So now the prices of the houses are coming down, which because you have inflation, these people can't control it and you can't control it, but it affects everyone. It is what it is. Then you have the high price of houses, and you have a high interest rate. You've got three things that are really high, which makes it difficult. The one thing we want to point out is, if you are renting, you are paying 100% interest rate on your house that you're living in. Remember that.
It is always better to buy.
It is always better to buy. The rates could come down. I'm not going to make you any promises. They are volatile. They move all the time. You can refinance. But if you are renting, you have zero equity, nothing's coming down. Right. Now, we still have to keep you budget friendly. We want you to know that the three of us, we are not going to put you in a home that you're not budget friendly, because if you call us and you need to get out of your home in the first 2 years, that's not going to be good, and we're not going to do that. But at any time, it is never, ever, ever a good idea to rent and throw all your money down the toilet. And I saw this on Facebook, and I thought it was a good example. I'm just kind of stab a little wound here. You'll go out and get a credit card and charge things on it at 12% or 14%.
Oh, absolutely.
You'll buy a vehicle at 8%. Why would you hesitate to buy a house at 6, 7, or 8% when it's the largest investment? Like, you own it. You're going to have equity in it. It's your biggest asset ever.
Yesterday I heard 3 or 4 times Marry the home, date the
Right,
rate.
that's right.
That's
Well,
what the new, I guess that's the new.
it is. That's
Cool
the new
phrase
term,
now.
but I have to say this. These rates are normal. You know, the only reason they ripped the Band-Aid off and went so low was because of a worldwide pandemic. So I don't want to sit here and falsely say, hey, the rates are coming back down to
Right.
2.5% next summer.
They're becoming
Yeah.
steady, so they're not continuing to raise them every 3 weeks, a
We went
three-quarters
to
to
a
a
pretty bad
quarter.
week last week, but they have finally studied a little bit.
And everybody's nervous about the whole situation that we just talked
Right.
about, and we are trying to calm that and know that.
Calm the storm.
Calm the storm. This is normal. You need to get with a realtor and a lender who knows what they're doing, because what these lenders are doing so phenomenally is realizing what's going on in the market, and they're creating new programs to help.
And that's why
There's
you
rate
can-
buy down programs, different things that we don't have time to talk about
Oh,
all that
absolutely.
today. You have to have a private meeting and know about you personally. Then she can tailor the loan around you and your family.
That's
Right.
exactly
So
right.
what do y'all have going on right now, right?
What do you
To
mean?
our clients.
Well, we have the
Great program.
rate programs, other than just our regular programs. You mean niche product or
What is a buy down program? That's kind of what a big word is right now.
A
What
buy
does that
down
mean?
gives you the ability to spend upfront money to get a cheaper interest rate.
Let's be clear.
It's
Nothing
not,
in the world is free.
It's not
It's
cheap.
not free. So you can basically buy down. The interest rate is 6%. I can buy it down by paying money to make my interest rate come down.
What's the lowest you can buy it down? Like a point and a half? What can you buy it down?
Well, that's a hard question right now in today's world. It is, because it is so expensive to buy. But it would be based on what the current rate is, and you can buy down. Literally, you can buy wherever you want to go if you're willing to pay for it.
It's just a lot of money. What we all talked about generally, and we are having our home buyer seminar tomorrow, is 90% of most homeowners are monthly payment centric, right? What is it going to cost my monthly payment? That's what they want to know.
Correct.
So we can get that monthly payment there, but it's not free. And so when you actually sit down with your lender for a consultation, she's going to say, okay, if you want your monthly payment at $2,000, we can get the rate down. It's going to cost you X amount of money.
Up front.
Up front. That's and then we can help negotiate that with the seller. So we can't go through everything here, but my point is we can make it happen. There are options, but to be specific about what you and your
And
need,
you put them on
you have to
paper,
sit
let them
down.
see. You know,
Yes.
is it worth this upfront
And
cost to
sometimes
say
it is.
just this amount of money?
So let's just say if I said, Dina, I'm only going to be in this house for 2 years, 3 years max. I already know it. You know, I want the lowest monthly payment. I don't care about those fees because I know I'm going to turn around and sell it. Most people are, how long are in their house?
7
7
years.
years.
Nine.
7 to 9 years. So if you keep the payment down, you know, that it's an option that you have to sit down and determine what's best for you and your family.
What about assumables? I've had a couple of clients ask me about assuming the loans.
Yes. We've heard that, but I hadn't had anything. When it comes to that, make sure that the seller knows what their responsibility is. That's what I will tell you. But honestly, I have not had one.
Here's the
person-
only thing I know about that. In 13 years, I've never done one, but now's the time you'd want to do it. But let me tell you, this is what I know. So let's say you're looking at a house that's $300,000 and you say, hey, can I assume that loan mortgage? How much is their interest rate? And their interest rate is 3% and it's 7 now. Seems like a great idea, right? The house is listed for $300,000. Well, if they owe $200,000, you can only assume $200,000. You got to come up with a $100,000 difference. You
So
can't
you're
assume
assuming
the
the
whole
loan.
amount. Yeah,
You're
you're
not
assuming
assuming
the loan.
the sales, the house. You're
Right.
assuming the loan.
So then you've got this $100,000 that you have to make up. Well, if you got a lot of cash on you, sounds like a great idea, but you've got to close the gap.
Yep.
And I've never done
So
one
we're looking
because of that.
at the difference between what's owed on the loan and the current market value.
Right.
That's the
That's what
difference.
you'd have to come
so
up with.
they may only own $200,000 on the loan, but the market says the house is worth $300,000.
And that's what
And they're
sells right.
selling it at $300,000. So you can't assume the loan at the
Right.
the
You can-
mortgage.
yeah.
You can't-
You
yeah.
have to assume it at the market value. So we might be able to see a little bit more of those because we have so many people that got into homes with really great interest rates, but it's going to cost cash in order to do that a lot of times. So
I wonder, this is for an off-camera discussion, I have a couple of listing appointments this week that they just got in their house a year or two ago because they're going to be at that interest rate, but they may not have much equity in it, so that might be a good thing. Okay, that was an off-camera.
See, talk to us. We
That was an
know a
off-camera.
lot.
If we don't, we're going to find out for you. Well, we just have a couple of minutes left. We want to thank Dina for joining us, and Darla's going to lead us out at the end here. I just want to say really quick, we're super excited the three of us. You will see us again tomorrow evening at our home buyer seminar at Thrive's office in Valley Ranch Town Center. It's a super nice office.
How many spots we have left?
We only have 2 spots left.
2 spots left. But we're going to do it again. But we're going to do it again next
Oh yeah,
month.
you can shop at Hobby Lobby, then come over to
Right.
us.
So yes, the Thrive Mortgage, she's over there in front of Hobby Lobby. We got 2 spots left. You can go on the Hastings Facebook page and go under events and register there. For those 2 spots, you get a free dinner, you get a free credit pull, a meeting with Deanna to kind of see where your finances are and
Correct.
if you want to, look at the loan process and see maybe get a pre-approval working. And then you get a chance to win
$5,000. Every single
Yep.
person that attends this seminar is going to have dinner, credit, and a chance to win $5,000.
Yep.
And man, I hope you win it.
And we're going to do it again next month. So if you missed out on this month and you want to take part in it, we're going to do it again next month. So we have our YouTube link up. It's on my website, darlanelly.com, and it's also, Judy's working on
It's
getting
on
it
the
on
way.
hers. And then we've got it on the YouTube. If you go under Design Realty Group, you can see the Real Talk Live. We have several episodes there now, and we're just going to continue to add to those. But there's a lot of really good information. They're long sessions, but you can read them in the car. You can listen to them in the car. You can listen to them on your AirPods, your AirPods as you walk around doing your exercises or whatever. It's really good information. If you know somebody that's looking, pass our information along. We would love to sit down and have a talk with them and kind of see where we can help them. So again, thank you for talking with us and joining us on Real Talk Live. We're 2 friends, including Deanna today.
She's our friend today too.
Talk all things real estate. Make sure you check us out on YouTube.
Yep, real quick, our takeaway, hire a realtor. Work with a qualified lender that your realtor has worked with and has a relationship with that will make or break your closing and make your life a whole lot easier. What have you got to lose? A whole bunch of money. So you want us on your team and your side of the negotiation table. Thank you very much.
Bye, y'all.
Bye.